Welcome back to Orange US Stock Research, the channel where we cut through the noise and deliver clear, data-driven analysis on US stocks. Today, we're diving deep into one of the most talked-about names in the crypto equity space, BMNR, BitMine Immersion Technologies. This company has completely reinvented itself in 2025. It started as a Bitcoin mining operation, and in less than a year, it became the world's largest corporate holder of Ethereum. We're talking about a balance sheet that now holds over 4.4 million ETH tokens. That's more than 3.5% of the entire Ethereum supply. So the big question is BMNR a legitimate long-term investment, or is it a high-risk crypto bet dressed up in corporate clothing? Let's find out. BitMine Immersion Technologies trades under the ticker BMNR on the NYSE American Exchange. The company is incorporated in Delaware and headquartered in Las Vegas, Nevada. Its fiscal year ends on August 31st, which is unusual compared to most calendar year companies. From 2021 through mid-2025, BitMine was primarily a Bitcoin mining company using immersion cooling technology. Then came the strategic pivot of 2025. In June 2025, the company uplisted to the NYSE American from the OTC market, a significant milestone that opened the door to institutional investors. They also launched an at-the-market equity program to raise capital. The real game changer was the appointment of Tom Lee as chairman. Tom Lee is the well-known Wall Street strategist and co-founder of Fundstrat Global Advisors. His arrival signaled a clear shift. BitMine was going to become an Ethereum treasury company. Let's compare the BMNR model to MicroStrategy's Bitcoin playbook. Both companies use the same core strategy: accumulate a single cryptocurrency through equity issuance. MicroStrategy holds Bitcoin under Michael Saylor, while BitMine holds Ethereum under Tom Lee. But there's a key difference. Ethereum offers staking yield, which Bitcoin does not. This gives BMNR a potential income stream that MicroStrategy lacks. As of March 2026, BitMine holds approximately 4.47 million ETH tokens valued at roughly $8.8 billion, along with 195 Bitcoin, and approximately $682 million in cash. Total crypto and cash holdings exceed $9.9 billion. The company also holds a $200 million stake in Beast Industries, giving it a diversified moonshot portfolio alongside its core ETH treasury. Now let's get into the fundamentals. I want to be upfront. This is not a traditional operating company. BitMine is a digital asset treasury company, and its financials need to be interpreted through that lens. For fiscal year 2025, BitMine reported total revenue of $6.1 million, up 84% from $3.3 million the prior year. Self-mining contributed $3.1 million, equipment leasing added $1.9 million, and equipment sales brought in $800,000. For the first quarter of fiscal 2026, total revenue was $2.3 million, up 91% year-over-year. Notably, this quarter introduced a new revenue line, ETH staking revenue of $980,000, which will become increasingly important as the staking program scales. Gross margin improved dramatically from 5% in fiscal year 2025 to 55% in Q1 2026, driven by higher margin staking and consulting revenue. Here's where things get interesting, and where many investors get confused. For fiscal year 2025, BitMine reported net income of $348.6 million and diluted EPS of 13.39. That sounds extraordinary for a company with only $6 million in revenue. The explanation lies in accounting for digital assets. Under ASC 350/60, companies must mark their digital asset holdings to fair value each period. BitMine acquired massive amounts of ETH, and the unrealized appreciation generated a non-cash gain of $805 million. Conversely, in Q1 fiscal 2026, ETH prices declined from the August peak, resulting in an unrealized loss of $5.25 billion, driving a reported net loss of $5.2 billion for the quarter. This is purely a mark-to-market accounting entry. The key takeaway: do not judge BitMine by its GAAP net income alone. The real metrics to watch are ETH per share, NAV per share, and staking yield. Each share currently represents approximately 0.0098 ETH. Let's look at the balance sheet, because this is really the heart of the BMNR investment thesis. As of November 30, 2025, total assets stood at $11.5 billion, up from $8.8 billion at fiscal year-end. Digital assets, primarily ETH, accounted for $10.6 billion. Cash and equivalents were $887.7 million. Here's one of the most compelling aspects. The company carries essentially zero traditional debt. There are no bonds, no bank loans, no convertible notes. The primary liabilities are accrued management fees, unsettled digital asset trades, and warrant liabilities from a private placement. The debt-to-equity ratio is effectively 0%. This is a remarkably clean balance sheet for a company of this size. The company's primary source of liquidity is its ATM equity program. Through ATM offerings and private placements, BitMine raised approximately $7.95 billion in net proceeds during fiscal year 2025 alone. Now here's the critical risk factor every investor must understand: the dilution reality. The company's share count has grown dramatically, from 2.5 million shares in August 2024 to 234.7 million by August 2025, then to 408.6 million by November 2025, and 454.9 million by January 2026. That's a 182 times increase in just 18 months. The company conducted a 1-for-20 reverse stock split in May 2025 to meet NYSE listing requirements, then immediately began issuing massive amounts of new shares. This is the same mechanism MicroStrategy uses. Issue shares at a premium to NAV, use the proceeds to buy more ETH, which theoretically increases the NAV per share. When executed well, this is accretive dilution. When executed poorly, it destroys shareholder value. Operating cash flow for fiscal year 2025 was negative $4.1 million. The company is entirely dependent on capital markets for growth funding. Now let's talk about competitive advantages, or what Warren Buffett calls the moat. First, scale advantage, rated strong. BitMine is the world's largest corporate ETH holder, owning over 3.5% of the total Ethereum supply. This gives them access to institutional OTC desks, negotiating leverage with custodians, and significant media attention. Second, first-mover advantage, rated moderate. BitMine was the first to aggressively pursue an ETH treasury strategy at institutional scale. This advantage is real but not insurmountable. Third, management quality, rated moderate to strong. Tom Lee's network and reputation helps attract institutional investors who might otherwise avoid pure crypto plays. Fourth, staking yield through MAVAN, rated as an emerging moat. With approximately 3 million ETH staked at a 2.81% annual yield, the potential staking income is approximately $374 million per year. Fifth, regulatory positioning, rated moderate. The company uses regulated custodians and maintains compliance-first infrastructure. Overall moat assessment, narrow to moderate, real advantages but replicable by well-capitalized competitors. Now for the exciting part. What could drive BMNR significantly higher? The most direct driver is ETH price appreciation. BitMine holds approximately 4.47 million ETH. Every $100 increase in ETH price adds approximately $447 million to the company's asset base. Let's look at the scenarios. At the current price of around $2,000, the ETH holdings are worth about $8.9 billion, implying a NAV per share of roughly $19.6. If ETH reaches $3,000, holdings would be worth $13.4 billion, with NAV per share around $29.5, a 51% upside. At $5,000 per ETH, holdings would reach $22.4 billion, with NAV per share around $49.2, representing 151% upside. And in a bull market scenario of $8,000 per ETH, holdings would be worth $35.8 billion, with NAV per share around $78.7, a 301% upside from current levels. Beyond ETH price appreciation, there are several additional growth catalysts. First, the MAVAN staking launch. The Made in America Validator Network is expected to launch in early 2026. With 3 million ETH staked at 2.81% yield, this translates to approximately $374 million in annual staking income, a powerful recurring revenue stream. Second, institutional adoption of Ethereum is accelerating. Spot ETH ETFs were approved in the US in 2024. Major institutions including BlackRock and Fidelity are building on Ethereum. Tokenization of real-world assets on Ethereum is gaining momentum. Third, NAV premium expansion. Currently, BMNR trades at a discount to NAV, with a market cap of $8.6 billion versus NAV of $11.5 billion. If investor awareness grows, the stock could trade at a premium, similar to MicroStrategy. Fourth, BitMine declared the first crypto treasury dividend of 1 cent per share. While symbolic today, it signals the company's intention to return value to shareholders as staking income grows. Now let's be balanced and talk about the risks, because there are significant ones. Risk number 1, ETH price volatility. This is the dominant risk. ETH has historically experienced 80% plus drawdowns in bear markets. If ETH were to fall to $1,000, BitMine's holdings would be worth approximately $4.5 billion. A prolonged bear market could also impair the company's ability to raise capital through its ATM program. Risk number 2, continuous share dilution. The ATM program is the engine of growth, but also a constant source of dilution. The share count has grown from 2.5 million to 455 million in less than 18 months. While management claims this is accretive, the pace is extraordinary and creates significant uncertainty. Continuing with our risk assessment. Risk number 3, regulatory risk. The regulatory environment for digital assets remains in flux. Potential adverse regulations around ETH staking, custody requirements, or taxation could materially impact the business model. Risk number 4, concentration risk. BitMine's entire value is concentrated in a single asset, ETH. If Ethereum were to lose relevance due to competition, a security vulnerability, or regulatory action, the company's value could approach zero. Risk number 5, internal control weaknesses. BitMine has disclosed material weaknesses in its internal controls over financial reporting. For a company managing billions in digital assets, this is a real operational risk. Risk number 6, management execution risk. The MAVAN staking infrastructure, the Beast Industries investment, and the advisory services business are all early-stage initiatives. The management team, while credible, is relatively new to operating at this scale. Let's put it all together with our comprehensive scoring framework. We evaluate 6 dimensions, each worth up to 20 points. Business model and strategy scores 14 out of 20. Clear ETH treasury thesis, but execution risk remains. Financial health scores 13 out of 20. Debt-free with strong cash position, but heavy dilution and GAAP losses. Competitive moat scores 11 out of 20. Scale advantage is real but replicable. Growth potential scores 15 out of 20. Massive upside if an ETH bull market materializes. Risk management scores 9 out of 20. High concentration and volatility risks are concerning. Management quality scores 12 out of 20. Tom Lee brings credibility, but the team is still proving itself. BMNR scores 74 out of 100. This reflects a company with a compelling strategy, a clean balance sheet, and significant upside, but also substantial risks tied to crypto volatility and aggressive dilution. Our investment stance on BMNR is cautiously bullish with a watchful eye. Here's the thesis in plain language. If you believe in the long-term appreciation of Ethereum and that institutional adoption will continue to accelerate, then BMNR offers a leveraged, liquid, and regulated way to gain that exposure through a US-listed equity. The company's scale, Tom Lee's leadership, and the emerging staking income are genuine differentiators. However, this is not a stock for the faint-hearted. The extreme volatility, the relentless share dilution, and the complete dependence on ETH price make this a high-risk, high-reward proposition. For investors bullish on Ethereum, BMNR deserves a position in the speculative portion of a diversified portfolio, sized appropriately to the risk. For investors neutral or bearish on Ethereum, there is no fundamental case for owning BMNR at any price. The key metrics to monitor are ETH per share, MAVAN staking launch progress, share issuance pace, and the ETH price trend. That's our deep dive on BMNR, BitMine Immersion Technologies, a company that has made a bold bet on Ethereum at a scale that no corporate treasury has attempted before. If you found this analysis valuable, please like and subscribe to Orange US Stock Research. We publish in-depth stock analysis videos every week, covering US equities across all sectors. Drop your thoughts in the comments. Are you bullish or bearish on BMNR? We'd love to hear your perspective. Until next time, stay informed, stay disciplined, and invest wisely. This video represents personal opinions and analysis only, intended for informational and educational purposes. It does not constitute any investment advice, recommendation, or offer.